Welcome back. We're here in the office. Vacation's over. I'm back on my setup with all my monitors and screens. Today, I'm gonna be going over my favorite trades that I've taken so far this year in 2022. These are trades that I've called out inside the mentorship group, and so I'm gonna be pulling up those previous callouts and breaking down why I entered and why I exited, and trying to explain to you or get you one step closer to becoming a successful trader and helping you understand what it is that I do to find success in the market. Again, if you're new, we post an episode every Wednesday at 3 p.m. Eastern Standard Time, so make sure to subscribe and smash that like button. Without further ado, let's get on with today's episode. All right, so I went ahead and pulled up the trading callout section inside the mentorship group. My last trade, this was actually just yesterday that we closed this for profit. It's fresh in my mind. All right, this was a 38.27% gainer. Great trade. This year, like I mentioned, we're up 230-ish, whatever percent. And we took a loss last week, our biggest loss of the year. We took a 31% loss on XLK. Luckily, that same week, earlier in the week, we were able to make 40% on docs. So we still had a net positive week. This week, you can see we closed Apple for 38.27%. This was a great trade, and I thought I'd just pull up the screenshot and explain why I entered and why I exited. Hopefully you can learn something from this and maybe even do the same thing. All right, so I am a trend trader. Now I'm trying to zero in on different chart patterns, and within these patterns, I'm identifying a series of setups. All of those setups I actually teach over inside my master class. So those setups are how I'm able to find these trades that I'm calling out. So this isn't a callouts group. You're actually gonna learn how I'm finding these trades from entry to exit and how I'm executing these positions. So here's what I said on Apple. All right, I'm opening up a position on Apple. You can see we recently broke the pattern of lower highs. All right, I'm gonna pull up Apple. So the pattern of lower highs was, well, we formed a high at 183.38, all right, pulled back, okay. You can see we weren't able to break above this high formed at 177.21. Boom, 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 boom. Lower highs, all right? A break above this previous high, all right? So when we cut a break above 168.86, that is considered a break of pattern. Okay, direction shifted. That was when the overall market shifted just 2 weeks ago. So you can see there's clear resistance sitting at that all-time high at 183.38. So this resistance level sits about 2.6% above where price is currently trading. Okay, so when I call this out, here's a screenshot. The resistance level at 183.38 was sitting about 2.60% above where we were currently trading. So this level is going to act as my max pain. Okay, my max pain on a trade is when am I gonna cut for a loss? So when I go to create my trade plan, I wanna know, my max adverse excursion, how much I'm willing to lose on a trade. So if I see that, all right, I'm risking 2,000 on this trade to make 2,000, is that risk to reward worth it, okay, to merit taking the trade? So I'm using support and resistance levels or moving averages to figure out how I'm gonna manage a trade and to figure out whether the trade is worth taking according to how much I'm going to be up when I'm, taking profit, or how much I'm going to be down when I go to cut for a loss. But I could see that, that resistance level, and when I'm looking at these contracts and figuring out, all right, if we get a move to that resistance level, how much am I going to be down when I'm actually cutting that trade for a loss? I ended up taking this trade, obviously, so the risk to reward I felt was worth it for myself and for the entire group, for those who may have also been following along. There's so much that goes into trading, and as these episodes go on, I'm going to try to get a little more in depth. So I really hope that you start from episode 1, and if you haven't yet, go back to episode 1 and watch up to this point, because it's going to be a progression of starting off with the basics and then getting more advanced as we go. And all of this is covered in depth in full video breakdowns inside the masterclass, and I'll put a link, the first link in the description. It's my mentorship group. Okay, so the mentorship group, you get the masterclass. It's all included. It's a one-time purchase, and you can follow my trades. So Apple is currently sitting in overbought levels on the 4 hour. All right, so you can see after forming this support level at 148.93. Okay, overall market started to pick back up, direction shifted. We were able to break our pattern of lower highs at 168.86. Now we're sitting up here, all right, we're overbought. This chart is showing signs of being overbought. Now, what am I gonna do? All right, I'm obviously calculating my margin for profit. So in this case, pulling up that screenshot, I'm looking for a move back down to that 50-day SMA. Okay, that is what I'm gonna be looking for when I come in and I buy my puts. And I think because Apple is sitting at overbought levels, there's support overhead at 181.38. I know this is the max I'm willing to lose on this trade if price continues to push and we break through that resistance level. But overall, all right, I'm just identifying a very, very overbought chart. So I'm looking to capitalize on the inevitable pullback, all right, once this rally presides, because I see we're approaching levels at which this chart isn't going to keep moving in the way it is. So we're looking at this previous trend, all right, we're identifying this setup, okay, and now I'm going to go and look for my contracts, okay. I bought some contracts, pretty safe contracts, a month out, and they're further in the money. These are the contracts I actually bought. All right, I bought the 5/6, so May 6th, $185 put. I am just seeing that, okay, Apple is sitting in overbought territory. All right, yes, we broke this pattern of lower highs, but many stocks did over the last 2 weeks because of the shift in direction within the overall market. Yes, Apple could continue pushing, but I know we've got our resistance overhead, and I know how much I'm willing to lose, and I know that, all right, the risk to reward is gonna be worth taking this trade because of the potential that is presented when we get this pullback. I can't say inevitable because nothing is 100% guaranteed, but I'm looking for a pullback to that 50-day SMA. Again, the 50-day SMA acts as a support level. It's important to understand that these three moving averages I trade, the 15-day EMA, that blue line 50-day SMA, and the 180-day SMA, are either going to be acting as a support or a resistance level. Now I look at it this way. The 15-day EMA is going to act as either the weakest support or resistance level, followed by the 50-day SMA, and then the 180-day SMA. So if I'm looking at a chart and I see that price is getting rejected by the 15-day EMA, the weakest, in this case, resistance level, well, that tells me that buyers are very weak, and that in this scenario, if price is getting rejected at that 15-day EMA, that means that the stock is bearish. All right, we're trading lower, okay, unless we get a break above that level and shift direction. As long as we continue trading below that 15-day EMA, that means chart is going from the top left to the bottom right of the screen. Okay, it's bearish. So I entered this trade on a 329, okay, and I closed it yesterday. Okay, so I entered Tuesday, I held it through Wednesday and Thursday, and I closed Friday. So that is a swing trade. Okay, anything you're buying today and selling tomorrow is considered a swing trade. Upon entry, Apple was trading at 178.88. We bought these contracts at $9.80. Right, these are the contracts we bought. If I pull up the live chart, because this again was yesterday we closed, you can see. If I go on the 5-minute here, it'll give you a good overview of what this week looked like. But you can see we entered here on Tuesday. The following day, which was Wednesday, we did get a little pump on Apple. We ended up making a new high, a weekly high there on the 5-minute at 179.61 as the overall market continued to push. I have never made any money sweating the entry. Okay, I might be a day early, I might be 2 days early, but if I'm looking at a trend, I find a pattern and I'm identifying a setup, you have to trust your process. You have to trust your strategy. After that little pop up to 179, you can see price started to pull back, we started forming lower highs. You can see aftermarket and then pre-market heading into Thursday, we started pulling back. Thursday morning, Apple really dumping, little recovery, kind of trading range bound throughout the day. Another big dump into close. Okay, aftermarket, trading range bound. Pre-market started pulling back again. Market opens, and then you can see we get this pullback, and this is when I closed this trade. Now, this is what I'd like to call a pretty textbook trade because you could see we nearly hit that entry perfect. Again, it doesn't have to be a perfect entry, but the following days, what we predicted when looking at the 4-hour time frame, okay, when seeing that not only Apple, but the overall market was sitting in very overbought levels. Now, it's important to never trade inside a bubble. You always want to be aware of the overall market. Friday morning, I sold my contracts at $13.55 a contract, okay? So a nice 38.27% return on that trade. And just because this was yesterday, I'll actually go to the profits channel with inside the mentorship group, and I actually ping the team right after I close this trade. I closed it at like 9:33, so market open, Apple started pulling back, locked in profit. I asked the team who made money with me on Apple. You can see 37 people reacted. Now, there's 300 people online in the group right now. There's more than that in the group as a whole, but it's nice seeing when people are engaging within the group. Another one of our members made 31%. Here you go. One of our members posting his gains, 32% gain. So I'm only gonna go over one more trade, and I think I might start doing this more often, and hopefully I'll get a better flow for going over previous trades. I'm gonna do a better job moving forward at logging trades I'm taking. I'm gonna do a better job at screenshotting the chart upon exit. All right, the next trade we're gonna go over is ticker symbol WHR. So since coming off its all-time high at $245.44, WHR had been in a steady downtrend. You can see pretty much steady downtrend, lower highs, okay? Again, we're identifying this pattern of lower highs. Support formed back in October was broken, resulting in a new low, and that new low was formed at 193.47. And you can see price continued to get rejected at that 50-day SMA. All right, that red line right there. So charting lower highs, support broken from back in October, and a new low formed at 193.48. So I'm looking at this chart, and it's pretty clear here that this pattern is more than likely to continue to develop. So at the time of entry, where we're currently trading, price was at around $204.80. All right, so I'm looking at this chart, I'm calculating our margin for profit. We're looking at about a 5 to 6% margin for profit from where we're currently trading to that low formed at 193.47. An entry right now, and considering price moves back down to that low, that support level, would present a 5 to 6% margin for profit. Now again, it's always important to have a trade plan. Trade plans are vital in your success as a trader. You always want to know what you're going to do in every scenario. When are you going to take profit? When are you going to cut for a loss? Now, in this case, I was looking to cut this trade for a loss if the pattern of lower highs here that we had been forming was broken. Now, that would mean a break above 207.54. Now, I'm going to set my stop loss at 207.60. All right, upon breaking that resistance level, according to how many contracts I'm buying, I'm going to be able to see exactly how much I'm going to be down on this trade at that point of breaking that pattern of lower highs and exiting for a loss. And on the other hand, what I'm looking for out of this trade is a move back down to that low formed at 193.47. If we do break 193.47, this chart will continue to pull back further and form a new low, again on the 4-hour time frame. So now I'm going to punch in my option contracts. I'm going to see what my profit's going to look like if we do get a move down to that level, how much I'm going to be down, how much I'm going to be up, and is that risk to reward worth it, okay, worth an entry? Is it worth taking this trade? All right, am I comfortable with what I'm risking compared to what I'm going to make? And I always think about, because people are watching my trades, would this make sense for someone else to enter? Now, we entered on 2/15. That was a Tuesday. And then we actually ended up holding this position for a week and closed on 2/22, which was the following Tuesday. We sold these contracts for $10.40 for a nice 53% return. So here you go. You can see where we closed this position. And I always say, charts don't lie, okay? Charts do not lie. So another textbook trade inside the mentorship group. I really hope this cuts together well. Obviously very hard to look back a month or two in the past and look at a live chart just because of how skewed it'll end up looking. It's easy when I have a screenshot from the actual call out, which I do on all my entries, but I'm gonna start doing that moving forward for all my exits so we can go over my previous trades more. Again, on the year, considering our percentage gainers and our losers, we are up around 238%, which is amazing. And the price that I offer this service for is it's nothing. So I honestly think that I'm going to be raising the price just because of the value. Having lifetime access to copy my trades might even double the price. So if you do want to join, I would click that link and get yourself signed up. See what I'm buying and selling and learn my system. I hope you guys did enjoy this video. Again, we're posting one of these episodes every week, Wednesday, 3 p.m. Eastern Standard Time. So smash that like button and subscribe if you learned something today. I'm hoping that through each video, you're able to gain a little more knowledge when it comes to trading and have some fun, you know, seeing what it's like as a full-time day trader. So let's continue on with my day. We'll cut to the outro wherever we were last. I hope you guys did enjoy that bit. All right.
All right, that is gonna conclude today's video. I hope you guys did enjoy. It's nice to be home. All right, we had a good time in Myrtle Beach, but it's good to be back. Obviously, it has been a great year so far as far as my trading and the callouts that I've made inside the mentorship group. Being up over 200% is insane. First link in the description. Hope you guys did enjoy, and I will see you all in next week's episode. Later.
If my hair is fine, but like I have no hair.
Yeah, there's not much to change.
Bro, I'm so depressed over how I look. It's so bad. Cool. Bro, was I not recording? I don't think I was recording. Whatever, I'm not redoing that. We'll use that audio.